All right, just fired a few incompetent line managers at Giga. Need to take a small break, so let's chat about this fascinating and rare phenomenon. Well, you've got the dollar and gold both rising at the same time. I mean, this doesn't normally happen, you know? Traditionally, a strong dollar should push gold down because, well, gold is priced in dollars. But here we are, high gold prices and a strong dollar index breaking past 110 point recently. It's kind of baffling, right? This isn't the first time we've seen something like this, though. History's given us some interesting lessons. Back in 1983, during the Latin American debt crisis, gold surged like crazy, over 1,600% from the 1970s all the way into the 80s. And let me tell you, that didn't end well. The entire region just collapsed economically. I mean, imagine an entire lost decade wiped out after a period of what they called the Latin American miracle. Then fast forward to the early 2000s, gold skyrocketed again, 7 times the value, at least, during the lead up to the 2008 financial crisis. Do you see the pattern here? Every time gold and the dollar rise together, there's always bad news waiting just around the corner, and the bad news doesn't play out evenly. Countries like India, with more fragile markets, they usually bear like the brunt of the damage. Why? Well, there's higher reliance on foreign capital, and that opens the door to all kinds of market manipulation. But here's the wild card. What's driving gold prices today isn't just past trends repeating themselves. There's like this renewed fear in global markets, this uncertainty. Investors are flocking to safe havens because they don't trust what's in front of them. And really, that's what's pushing both gold and the dollar up simultaneously. It's a strange mix of risk aversion and kind of chaos management. And for emerging economies like India, the stakes are high, really high. It reminds me of what happened during the 2008 crisis. I mean, yeah, it was catastrophic, but it also sparked this wave of innovation. People had to figure out ways to survive. And now there's a similar vibe, right? Like, as markets tumble and rise unpredictably, will this create new opportunities, or will it just devastate economies further? Honestly, we have to think about this strategically. And the thing is, while gold prices climbing might mean safety for investors, it creates havoc in economies that are already teetering, because the fiercer the rise, the harder the fall. That volatility, it's not just numbers on a screen, it's lives, industries, entire markets at risk. Now let's focus on India for a moment. I mean, capital flight is a serious issue here. Just look at the numbers. Foreign investors pulled out billions of dollars in just a matter of months. And this isn't like some isolated trend, you know, it's part of a bigger picture. When foreign capital withdraws at this scale, it leaves behind what's basically an economic vacuum. The ripple effects are pretty devastating, but the government's reforms, well, they haven't exactly helped. Take the demonetization moves supposed to crack down on corruption and black money. It ended up disrupting the lives of millions of ordinary people. Think about it. You've got a nation with hundreds of millions, barely making ends meet, and then, bam, their savings are suddenly worthless. That kind of shock doesn't just go away. And, well, another big question is, why is India, with all its demographic potential, still struggling to industrialize? Honestly, it's hard not to compare with China. I mean, China turned to industrialization decades ago, launching initiatives like the Belt and Road, which, okay, controversial as it may be, did bring massive infrastructural and manufacturing growth. On the other hand, India's Make in India initiative, yeah, the results have been underwhelming, to say the least. Manufacturing still makes up only around 15% of GDP. That's lower than bankrupt Sri Lanka. So what's the problem? Why isn't this working? Part of it, I think, has to do with the sheer size and complexity of India's economy. Internal issues like class struggles over land rights, they're a massive hurdle. And externally, India's over-reliance on foreign capital comes back to bite them every time. It's like this constant cycle where just as things seem to stabilize, the market crashes again. But you know what's odd? Every time there's a crash, foreign investors seem to disappear just long enough to scoop up assets at bargain prices, only to flood back in and make a profit. I mean, isn't it strange how predictable this is? You'd think like by now there'd be a way to prevent such exploitation, but here we are. So is it by design, or is India just stuck in one of those endless loops of kind of development and setback? And then there's the human cost. Let's not forget, every downturn puts millions more at risk. Jobs, livelihoods, entire communities gone. And yet the big investors, they walk away richer each time. It's maddening to watch. So let's dig a little deeper into the core issue here. Who really profits from these systems. India, despite all of its vast resources and potential, seems stuck in a cycle where, well, the real benefits go to foreign players. It's like, there's this massive machine at work and it's funneling wealth out of India while leaving just crumbs behind. How is this sustainable? And if we think about similar scenarios, China's investment strategy in Africa comes to mind. They've sunk billions into the continent, funding infrastructure and resource projects. On the surface, it looks ambitious, right? But scratch beneath the surface and you'll find contracts with, steep repayment demands that tie these nations into decades of debt. It's not a partnership, it's control. India's situation feels eerily similar. Foreign capital flows in, right? But instead of building lasting economic strength, it's about short-term plays. Once the profits are made, the investors leave, and then there's nothing left for the locals. I mean, is it really partnership, or have we rebranded exploitation for a modern audience? And the capital flow cycles are kind of predictable, aren't they? But during economic booms, we see heavy investments that inflate markets, fueling optimism. Then just when things feel stable, the wealth is harvested, assets are scooped up, profits are taken, and economies are left gasping for air. It feels deliberate. Almost like watching the same movie over and over again with different characters, but the same ending. The bigger question, though, is can India break free from this? Building a more equitable system, one that truly benefits, its own people, isn't impossible, but it requires some serious moves. Less reliance on foreign capital, more focus on strengthening internal industries, right? And maybe figuring out how to prevent this constant leakage of wealth. That's the hard part. It's not impossible, but it's definitely a steep climb. And look, global parallels are everywhere, whether it's Africa, Latin America, or even the United States to some degree. What we're seeing is a system designed to advantage a few while the rest scramble to, just keep up. It all boils down to this. Until we rethink how wealth and resources are distributed, cycles like these will just keep repeating. And honestly, maybe it's time for better leadership across the board. So where does that leave us? Well, the world's changing. India, like many nations, faces choices, hard ones, but also necessary ones. Because if history's taught us anything, it's that those who do nothing to adapt, push back, end up being left behind. And maybe, just maybe, that's not the script they want to keep following anymore. All right, and let's stop here. See you at Giga next time.